Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. It's Sunday afternoon, so it's time for my weekly market prep, where I go over some of the major U.S. stock markets, kind of discuss market structure and, which direction price happens to be trending at that point in time, so that you can make better trading decisions and ultimately make more money. Real quick, if you appreciate this content and the fact that I'm dropping it every single week, please go down, click that subscribe button. I did finally break 100 subscribers, so great job, you guys. But let's go ahead and keep the train rolling. Go down, smash that subscribe button, and let's go ahead and jump into the charts. Starting off on a daily time frame, looking at the DXY, you can see we had a pretty solid week here. Going back to Monday, kind of a red day. A little hesitation as we ran into this 50-day moving average, but then closed the week fairly well, moved all the way up into this green supply area before ultimately finding some resistance and pushing back down. Now, I wouldn't be totally surprised if we saw a move back down to the top of this channel and the confluence of our 20-day and our 50-day moving average. At that point, I would expect support to kind of step in and push us back up to the top of this channel, about 105 or so, before we ultimately run into resistance along with this 200-day moving average. So that's what I'm expecting from the DXY. Let's go ahead and take a look at the NASDAQ. NASDAQ also had a fairly solid week, pretty strong move up. You can see here all the way into this long-term resistance line. I'll actually zoom out to the weekly time frame. You can see 1, 2, 3, 4. This is about the 5th time or so that we have retested it. And you can see that price action broke out of this little consolidation area, moved right up into it, found some resistance, and kind of got kicked back down. Now, do I think we're going to come all the way back down to about 13,278 or so, which is the top of this consolidation channel? It's possible. It could happen for sure. The 20-day moving average is currently above that. The 50 is coming alongside that. So, if the 50 moving average gets above the top of this consolidation channel before price action gets all the way back down here, I would expect price action to respect the moving averages, move down, maybe toy around with them a little bit, and then ultimately see a push back up. As far as targets are going, let's actually zoom out to the weekly time frame. 14,800 looks pretty interesting to me, about 14,800 or so. 14,750, 14,800 looks like a pretty interesting level, so you might see that move up. That's what I'd be looking for. If it does break below the 20-day moving average and the 50-day moving average and this consolidation zone, we do still have the 200-day moving average below us as well. So if price action were to actually break all the way down here like this, I would expect it to stall out around the 200-day moving average. Let's jump over to the Russell 2000. Russell is still trapped in consolidation. It has been for about 6 weeks now, 5-6 weeks. It's been stuck in this consolidation channel. We did get a nice move through the 20 and the 50-day moving average. If we zoom in here, you can see we broke through the 50-day moving average, closed above it, got a second green day, and then a red day kind of wicked it. Another red day kind of toying around with the 50-day moving average. I'd like to see price action hold this. I'd like to see price action hold this level and then actually take a move back up to 1923 or somewhere in that vicinity, which would give us a move of about 8%, 8.1%. So I think that would be a really solid area for any kind of take profit on a swing trade. Of course, we do still have the top of the channel and the 200-day moving average that we have to get through. So keep an eye out for that if you are looking for long positions on the Russell 2000. Of course, if we do fall back down below the 50-day moving average, the 20-day moving average, I could see this 1735 level breaking and price action flushing back down to 1655. I think that's completely impossible as well. But like I said, what I'd like to see ideally is for price action to hold and move back up to 1923. Now, jumping over to the Dow Jones. Dow Jones has some really good structure to it right now. You can see we had this great move up starting from the middle of March 15th, moved up, topped out our move about the middle of April, started this downward descending channel, got a little false breakout at the beginning of May, went up, pretty much tagged this 34,345 resistance level, and then continued consolidating lower. I think this is, like I said, this is some really great structure. This is kind of what you look for, is a sharp movement up followed by kind of a downward consolidation and then another sharp move up. I do think we'll break right through this 345 level. Zooming out to the weekly time frame, we do have another resistance level at 35,410. So let's look at our fib levels here. We'll go from 1 to 2. So yeah, I think this movement might stall out about 32,854. That's a 50% retracement. Looks like the 200-day moving average is also going to be acting in confluence about that area. And if we take a look here, yeah, that 35,410 level is right in between the -2.5 and the -618 extension. So this could go either way. This could go up to about 35,000, or it could go up to about 36,000 if we're hitting either one of those levels. Lots of good levels here on the Dow Jones that you could pretty much take your pick of. We do have a 50% level, like I said, right at about 32,854. It become a little bit lower to that 618, which is, we'll actually delete this for just a second. 618 is pretty much perfect confluence with that 32,580 level that you got from price action. So that could also be a good place to entry. Just keep an eye on those two levels specifically to see where price action is going to stall out and actually start this continuation moving back up. So it could go from somewhere about here, and you might just see a real pretty move up like this. If we did get this kind of move, that would take you for a real solid 8.5–9%. Really solid on an index like the Dow. So you could do really well just paying attention to this one thing. Now, we've gone through our indexes. Let's go ahead and take a look at my trade of the week. This week we are looking at Transocean Limited. The ticker symbol is RIG, R-I-G. I did previously feature this stock probably about 4, 5, maybe even 6 weeks ago. I don't think it was 6 weeks, maybe 4 or 5 weeks ago. It wasn't quite ready to break yet, but you can see we have this really nice bull flag structure here. Got this great move up, this downwards consolidation, this support area holding, kind of textbook bull flag setup here. Bull flags do typically break to the upside. They break in an upwards direction, and when they do, they tend to break very nicely. So we have this resistance area above us, runs from about $8 to about $9.65. We'll go to a weekly time frame real quick just so you can see. If we take this move, we go from 1, 2 to 3, pull it back down, zoom out. You can see a measured move would take you just about to the top of that channel. I think that would be a really solid place for take profit if you wanted to hold for some type of hyperbolic move and you think price action is really just going to absolutely explode here. The 3.618 $19.90, and I also have a very, very long-term resistance level at about $20.13. So somewhere in that area, $19.90 to $20.13. And like I said, that's kind of a best case scenario, unicorn type of move, because that type of move would take you from where price action currently is. That would take you for about 250%. Obviously, that's a massive monster crazy move. If you just took it to that 942 level that I mentioned before, that would take you for about 58%. You could probably get it all the way up to 60 if you held it just a little bit longer to the top of this channel, which, like I mentioned before, is about $9.65. Either way, you have pretty solid risk to reward here. We'll go ahead and take our position here on the break. We'll say at about $6.22. Pull you down to about $5.10, and then this guy is going to get pulled up to the top of our channel, and you can see the risk reward ratio is 3.04. So is this a home run? No, this is not a home run unless you take it for that 250%, but that's a low probability move at this point in time. So you could do it, but this is your own money. This is not financial advice, so do whatever you want. Yeah, you could wait for that moonshot, but I personally would stick to the solid 3-to-1 risk to reward ratio. No, it's not a home run, but you don't need home runs in the trading kit. You need solid singles, you need solid doubles, you need to get on base, and just stay alive. Thank you guys so much for watching. I appreciate each and every single one of you. Please go down and smash that like button if you enjoyed this video, and I will see you all next time. Peace out, homies.